Well, hello and welcome to what is truly a treat, which is a chance to sit down with one of the most influential investors and financial leaders in the world, never mind America, and ask him about where the world is going. That person, of course, is Larry Fink, head of the mighty behemoth that is BlackRock. And aside from having a chance to talk to him, which is wonderful, we're doing so at an extraordinary moment in history. Not only have we just had a presidential election that's kept most of us up all night for a long time, not only are we potentially looking at a real shift in policy in the coming months, we're also looking at a time when Europe is about to cope with Brexit, and maybe, just maybe, we're finally going to get some good news on the COVID vaccine at a time when COVID cases are going through the roof, to use a British phrase, in Europe and the US. So, Larry, quite a lot on your mind, I imagine.
Oh, it's just a normal day, and it's a beautiful world.
Can I just quickly ask, I'm going to talk a bit about sustainability in just a second, because you pinned your colors to the mast very clearly earlier this year and really sent shockwaves through a lot of the industry by coming out and saying that you were essentially going to embed climate change analysis and ESG analysis through all parts of your operation. So we're going to talk about that in just a moment, but first I have to ask a question that everybody will want to know, which is, were you surprised by the Joe Biden victory? Where were you when you heard it? And just how much difference do you think it's going to make to policy going forward?
No, I wasn't surprised at the ultimate outcome. I was probably more surprised at how strong President Trump fared. 70 million Americans voted for President Trump. 74 plus million voted for President-elect Biden. It really tells us we have not moved that far from 4 years ago. I think that's a really important message for the Biden administration and how they navigate going forward. We learned that the Hispanic community is not one monoline community, but many subsets. We already knew that there were strong views by many of the conservative segments of the American population towards President Trump. And actually, I think the final tally is more white women voted for President Trump than President-elect Biden. So I think, on the margin, obviously, the conclusion was for Vice President Biden to win, but it wasn't an overwhelming type of mandate. And I think that's what the market is assessing. The Democrats actually lost House seats. They have a stronger hold. There is a view that the Democrats need to move closer to the center. Now, if you analyze 2018, 2 years past the last general election, the Democrats took control of the House, but with conservative Democrats winning control of the House. There has been such a large narrative about the far left side. And obviously in the primary season, you had many more progressive candidates on the far left side. I think that's what distinguished Vice President Biden during the primary season. And that's why I think he ultimately took control of the Democratic primary. And so I'm encouraged by where we are. I think I was overjoyed on Saturday seeing the outpouring of support and love. It truly felt different and unique. I did not see that much in terms of the outpouring of fear and despair. And so obviously through media sources, we were seeing all the joy and there was a lot of joy. And I think, and I received probably more emails from our clients overseas than I ever did about this outcome. I mean, one of the most touching one was from a big leader in his country was, my love for America was reaffirmed, was his message.
So what do you think this means as someone who's close to many of the key players in Biden's transition team, someone who's been mentioned before as even a possible Treasury Secretary yourself? What do you think this means for how Washington is going to be approaching Europe in general and Britain in particular going forward? Because we've had pretty aggressive tone in the last 4 years. Do you think that's going to change in any meaningful way, or will it just be a cosmetic shift?
Well, watching the vice president, now the president-elect's behavior as a senator, as a vice president, and I'm sure as a president, there'll be a lot more consistency of conversations. There may be disagreements, but the disagreements won't be personal. There'll be a conversation, maybe an in-depth conversation. And so I think there's going to be a little more harmony. There's going to be less stress. There should be deeper, more labored conversations. But I think some of the messages from President Trump were strong, especially related to NATO. Start paying your percentage that you should be paying. And so, and Europe has come around. I think also Europe has come around even in the COVID crisis. You've seen more fiscal stimulus. So I would say the Europe of 2010 and 9, where they were frightened of using fiscal stimulus. It was mostly monetary policy, which we could spend a lot of time talking about that. During this crisis, I think Europe has moved more towards a fiscal stimulus. And I do believe there's been some great leadership moments from the European leaders during the COVID moment. So I would expect that we will have deeper, broader, more elongated conversations between our continents, between our countries. And I think that in itself will reduce the tensions and the tones. But I don't believe the messaging of being tough is going to be evaporating.
Interesting. So there'll be some cosmetic shift in tone, but not actually an overarching, and in dialogue, the dialogue will deepen, but not necessarily tangible shift.
Well, no, I wouldn't go that far. I didn't, because those were not my words. My words were there. My words were, I think we will, I think, by all reference, President-elect Biden will move closer and maybe fully adapt the Paris Accord. Right. I mean, there may be many things that we will see that will be changes of policies. Because I can't answer this until we see the composition of the cabinet, and I do believe the divided government will probably lead to a more centrist cabinet than if it was a fully Democratic Congress. And we'll have to see how this all plays out. And I think this is going to be a very important message because, as I said, President-elect Biden is going to be governing a very, very a country that's deeply divided. He committed on Saturday in his speech that he's going to talk about one America, govern America, irregardless you're red or blue. I mean, his message was applauded by the far left and the far right. If he governs that way, if he has the ability to govern with that stability, that means you're going to have to listen to the right and the red. And if that's the case, then I think we can move very quickly and very forward. And so I'm very encouraged about the opportunities that President-elect Biden has.
So let's take an issue which has been an absolute touchstone for exposing difference in policy between left and right, which is climate change and green.
Yes.
Now, you've had this extraordinary gulf opening up in the last couple of years in particular between Europe, which has embraced the green taxonomy, is charging ahead with not just controls on fossil fuels, but measures to encourage ESG and the type of activities that you have been embracing, BlackRock. And yet you have the US, which has had the SEC with someone who could have been acting commissioner, who has been actively hostile to ESG. You've had the Department of Labor come out and, I mean, who knows what the latest rule actually means because it's so confusing, but certainly isn't embracing enthusiastically the idea that fiduciary duty is compatible with, say, impact investing. Do you expect that gulf to change under Biden, and actually we'll have a Washington that embraces and supports ESG? And do you expect them to not just join the Paris Climate Change Accord, but also say to do measures like clamping down on fossil fuels, introducing carbon taxes, carbon pricing, or the favorite Republican word, a carbon dividend or environmental protection, instead of talking about climate change? You know, how do you see it going?
Yes.
Sorry, I did the first mistake of an interview, which is not much.
The answer is yes, but let me now give a better framework. I think how the US government was framing this and the activities and the results in the United States are very different than some of the political statements. And I mean, the US in the last 4 years, we actually, because of our natural gas being so cheap, we actually moved faster than Europe did. So Europe still is entrenched with more coal than the United States than ever before. And so Europe has the social desire with the government, but Europe has actually done less than America. So let's frame that. I understand the verbiage, but the results are, and a lot of it is just pure economics, that because of our cost of natural gas and because we have a lot of sunlight, we've been navigating heavily towards solar in many parts of our country. So the results in the United States actually are more resoundingly stronger than Europe right now. So I just wanted to frame that. That now the atmosphere is very different, and how you frame the Trump administration from all the different cabinet levels, you're right in framing that. But as I wrote in my letter to business leaders in January, I said climate change is investment risk. And I think more and more investors worldwide are buying into that. And we're seeing more evidence of climate change becoming investment risk. And the other subset of my letter, when I said this is going to be, basically I said a tsunami of asset reallocation, that's happening. And just even the symbolism of having ExxonMobil removed from the Dow Jones during this year, and the largest energy company in the United States is NextEra, which is a renewable energy company, has a higher market cap than ExxonMobil. I don't know what happened today with all the big movement, but before today, I could safely say that. So we believe we're witnessing this tsunami of change right now. Now in the United States, because we do have to live under the Department of Labor's requirements of fiduciary standard rule, we have more hoops as an investor to making sure we're doing the right thing as a fiduciary. So we have to prove that climate change is investment risk. And this is why BlackRock has been so focused on developing better data, better analytics. We have fully onboarded Rhodium, which is the premier company related to satellite technology, related to physical impact of climate change, onto our Aladdin system. We are now taking that. This is some of the commitments we made in 2020, and we're doing that. And so, because we are a US-based company, we need to develop the data to identify this. In 2020, 80% of all sustainable strategies outperformed regular indexes. We've seen more than a doubling of inflows in sustainable products. So the reality is this is the beauty of financial markets. And we're witnessing this today too, with the announcement of the Pfizer vaccination in another field. Once the markets understand a risk, even if the risk is in the future, we bring that risk forward. And that's what's happening with climate risk now. We are seeing more evidence of more investors worried about this, whatever it's, and we're seeing a change in how we allocate assets. We made a commitment at the beginning of the year that 100% of our portfolio is going to be, or are going to have a sustainable lens at BlackRock, and we did that. And so,
you've done that already, have you? You've actually
in our active funds.
I know you implemented in the active fund. I was going to ask you about your passive in a minute, but yes.
Yeah. So we're doing this because we have to do this for the U.S. based accounts. Now, there's no question the Europeans, in terms of investment strategy, in terms of corporate stewardship, they're years in front of the United States in terms of those factors. The reality is that governments are not as far along as the social values that are going on. So, and the United States, we're beginning to see more and more investors believe in this, are taking on this. And I do believe we're going to be moving into an investment world where every investor is going to have some type of sustainable lens on top of their other risk systems that they have to determine climate risk as investment risk.
So how big do you think the investment or the ESG market can get? I mean, it's what currently they reckon 23 trillion. Do you think it's going to end up being, doubling in a couple of years? I mean, what scale of momentum trade are we looking at right now?
Well, no, it's not just going to be that. I think the bigger impact is going to be, we're going to be judging every company in every industry. And I think the better companies that are more progressive in doing these things are going to be accorded a higher PE. So I actually believe this is transforming itself in so many ways already, where you're seeing the asset allocation within industries, within companies in industries, you're seeing some of the change. So that may not be, it may not just, you asked me a question specifically, how much money will go into pure sustainable strategies. What I'm trying to infer, we want to see all companies being judged in this, whether they're in a sustainable fund or not. And I think you're starting to see differences between company A and company B because of their sustainable strategies, and the companies are moving forward faster, are being accorded a higher PE. And that makes sense because we are seeing more money move into sustainable strategies, and that's showing up. There's more demand for a company in an industry. And so to me, if we want to talk about the greatest transformation is going to be, we're going to see bigger winners of companies who are more purposeful towards that. And those companies are going to become a leader in their industry. I was going to use dominant, but you don't ever want to use that word dominant, but they're going to be leaders in that industry. And that to me is that really reallocation of capital. You're going to see, the reallocation of capital could just show up in different PEs of different companies in an industry. And it could be, and I'm talking about even like the cement industry, which obviously has huge problems related to sustainability because of the amount of energy it needs and all the, but you're going to see some companies who are doing more things to try to protect their environment than other ones. And they're going to be accorded a different PE than the core industries. And that's what we're seeing in the energy companies right now. We're seeing a pretty big range between some energy companies and other energy companies. And much of it has to do with, is the leadership and the board really pushing forward? And how are they pushing forward? So I'm sorry.
No, I mean, I was going to say, so it's part of that. I mean, are you pushing for a world where everyone adopts SASB, say, or TCFD?
Since my letter, there's a 400% increase in SASB reporting companies, and we think it's going to be more than doubling from there. And I don't know the exact statistic for TCFD, but yes, we believe more and more companies are going to report under these metrics, and I think we had a big role in that. This is why I believe we are moving more and more companies in industry towards that transparency. And as more and more companies are allowing them to become more transparent, whether it's SASB, which will be able to understand more and more about their S and their diversity issues within their company, and TCFD, and we can understand how they are related to climate-related risk. That type of transparency will allow us to have better analytics, better data, so we can have better understanding to invest in a sustainable lens in all products. And so that's what we're looking forward to. And this is what we're pushing more than anything, having more and more companies report and having that transparency. The issue we will have, Gillian, is I believe there will be a world in the next 3 to 4 years that the majority of major public companies will report and have great transparency. The question is, are we going to be in a society where we're going to demand all companies, public and private, to have more transparency? We will not be able to change the world of sustainable investing until we have better transparency across public and private.
So basically we need it in private as well. Do you think in that context that something like the green taxonomy, which is a kind of top-down framework imposed by bureaucrats in a fairly backward-looking, rigid way, do you think that is less helpful than trying to have bottom-up market-driven frameworks coming through like SASB? I mean, are you happy with the green taxonomy?
As a markets person for how many years now? 44 years of being in the markets, I much prefer a market solution. I don't like looking backwards because our environments change. I'm talking about our ecosystem. I mean, just think about how COVID has changed public finance and the problems around public finance today, and are they going to have the ability to do everything they wanted to? We need to have more private solutions more than ever before. And if we could have more and more private solutions, public finance could go use money in different ways to help, the other parts of our economies. And so I'm a much bigger believer, and this is why I'm pushing it. I always like private market solutions than public market solutions.
Right. What about the passive funds? Because that is a great big, elephant in the room. Because no matter what you do in terms of the active funds, no matter how many letters you write, no matter how loudly you champion the cause of ESG, the reality is you have an incredible amount of passive money, which is not working in that direction right now.
Well, it can't, because they're not responsible for the composition of the indexes.
Yeah.
But that's what I'm trying to say. This asset reallocation is happening. It may be happening slower than some people want, but as we offer more and more sustainable strategies that as closely monitor or mirror an index, we're able to do that. As I said, 80% of those strategies have outperformed indexes. As we could show more and more investors, if they could get their board to approve, okay, we're not in a index, we're in an index that has many of the attributes, but in a more sustainable lens, that will happen. And I truly believe that is happening. And that's what I mean by those companies are in those more sustainable indexes, or customized indexes, what I should say. Those companies are going to be trading at higher and higher PEs, because on the margin, there is movement away from traditional indexes into these customized indexes. And that revolution is just beginning. So I'm not as pessimistic as you're suggesting. And in every one of my CEO letters since 2012, I read about something called long-term. All of this is not going to happen overnight, but it is happening. I would say if, maybe because of COVID or along with COVID, 2020 is a revolution when it comes to sustainable strategies and the amount of money moving into sustainable strategies. And a lot of those sustainable strategies, Gillian, are customized index that are closely trying to approximate what we call the traditional indexes. This is all going to accelerate. And at the end of this year, if those customized strategies have proven again that they outperform the traditional indexes that so many people use, I think over time we're going to get more and more of that elephant, as you called it, to be moving into different customized index. They'll still be considered somewhat passive, but not 100% passive, because we're going to navigate around that one element, or whatever element a client wants to. And because of technology and having better analytics and algorithms, we're able to customize these strategies, to the needs of each individual client. This is what I call the foundation of where we're going. To me, this is the exciting part of it. But it's going to be a long period to get this done. And I know many people who are environmentalists would like that change to be tomorrow. And they would like to see a vast change. In the United States, the men and women who are making these decisions must live under this fiduciary standard rule. And let me just say one other thing for those who are in the UK on this or listening in. The ERISA laws in the United States, if you do, it is a criminal offense, not a civil offense, a criminal offense if you go against the fiduciary standard rule. So you have to have the documentation. You have to have it. And that is one of the fundamental reasons why, as you use the word elephant, why it's going to be slow to move. But I actually believe in all my lifetime of 44 years in finance, I actually see this accelerating. This actually reminds me, Gillian, of my early years in the mortgage industry when I sat on a mortgage desk and there were two other people and there was we had less than $1 billion of mortgage securities outstanding, and how we, in 5 years, we elevated to become a dominant component of the global capital markets. Sustainability may not be in 5 years, but in 10 years, it is going to be the lens of how we look at everything. And I do believe because of better technology, better algorithms, we're going to have many more customized index strategies that closely approximate any index that have much more sustainable attributes.
Will you be pushing Biden to change the ERISA laws?
I actually was pushing that rule during the Obama administration too, to move it more. So I have been actually pretty consistent how we have to change it. There are many things that need to be changed in that. And that's getting back to the green taxonomy. What I worry about, it's all looking backwards and we need to adapt. This is why I really want more market forces. And that's why I'm willing to have this louder voice, because I believe if we don't do it as a private sector, we're going to be told what to do. And it probably, generally, it's not the right outcome. But we need to do it ourselves. And we need to have more people buy into it. I don't enjoy getting yelled at by the far left or even by you. I don't enjoy getting yelled at by the far right. I'm an easy target by writing this at times, because everybody's looking at what we're doing in the short run. And what we're doing in the short run, as I said, one good example, when you talk to SASB, they call it the Fink effect, that they had a 400% increase in companies reporting. That's a pretty big move in a few months. And I actually believe what we're doing, we're moving this and accelerating this, and I'm pretty excited about this opportunity. This reminds me, as I said, the formative years when I was a mortgage-backed securities trader, and I saw this huge potential. The market was this big, but the underlying assets, the mortgages, were this giant elephant. I see sustainability. We just have just a part of the elephant's ear poking out, and we have this huge opportunity.
Well, I agree, but I'm also not disinterested, because I saw the same thing 2 years ago, which is why I fought very hard for the Financial Times to create this moral money platform.
And you got it done.
Yeah, we got it done. Anyone watching who wants to know about this stuff, please click onto the FT and read the Moral Money platform, because we were the first media company to do that. But it's still got a long way to go. Larry, we're almost out of time, but a couple of very quick questions. Do you want to roll in the next administration to act as special advisor on any of this? How to reform ERISA? How to promote environmental footprints in the world? How to cope with all this? Is that your hope? What about Treasury Secretary or one of the other jobs?
I love my job at BlackRock because I could help the Mexican government, the British government, the US government. And I think the opportunity I have to working with many governments is probably the best role I could play.
And what do you expect, and we're almost out of time, but what do you expect, aside from green finance, the administration to do about financial services in general? So far, we've had indications that Gary Gensler is likely to be playing an advisory role along with others. We may have, people on the left like Elizabeth Warren pushing for more curbs on finance. There again, we may also have the centrist groups saying, hands off, we have other priorities. Are you concerned that financial regulation is going to change and that that could in any way impact the US-UK frameworks?
I think we should all be very proud of the financial services industry during COVID. I think overall the industry held up quite remarkably. I think there was a lot of fear in some of the small and medium business loans. This is why regulators asked banks to postpone dividends to protect capital. I think you're going to see a big reversal of that next year, especially in light of if we do have that vaccination. There will be some impairment because it's still going to take a long time to disseminate a vaccination. And I still think it could take as many as a year plus to have people feel comfortable. I think there was a study in the United States that only 40% of the Americans would ever take a vaccination. So getting that out and making sure that we're protected is going to be a lot longer. But having a vaccination that's 90% effective versus a flu vaccination that's 40 to 60% effective, that's a pretty amazing fact. But I would say government's role, especially with financial institutions, has to be protecting society from the tails. And at any given time, there's going to be some tail risk in some subgroup within the marketplace. Maybe it's private credit, maybe it's that. But overall, because of the equity markets and the strength of it, most corporations are in very good shape. I don't believe we have to focus as much on financial institution issues. If we remember, the 2007 and 8 crisis was because of financial institutions' balance sheets. This is not a financial institution balance sheet issue. In fact, when I spoke to many leaders, both European and American, in terms of they had so much excess capital, they want to give out more money if they could. And so this is not. We could look back and say this was not a financial institution problem. This has broader, more societal issues. There's no question this recession has deeper, broader implications than the one of 2008 and 9. It's more industry specific. Industries where humans aggregate and congregate are the industries that have been very harmed. We all understand why. So culture, travel, hospitality, lodging. That's going to take a long time for those industries to truly come back. But it's not because of balance sheets and banks, and it's an existential risk of health. And health is obviously a priority for all of us. We all have these desires to making sure we're all protected and healthy, and so we could live longer to see our grandchildren and watch them grow up and be great adults.
Last question, which I ask everyone right now. So what's the first thing you're going to do, or what do you really miss doing when we finally get out of lockdowns or get out of the fear of COVID?
Physical hugs. I'll be traveling around the world. When I see you next, you'll get a hug. I'm a hugger. I can't, all my clients, doing what I've been doing, I'm a pretty large social animal that enjoys the connectivity of human beings, the joy of life, and the joy of a great intellectual conversation over wine, and see the world.
Well, we look forward to seeing a Larry Fink hug index, which is one thing you cannot put into an algorithm. So okay. Thank you very much indeed for your time. Best of luck in getting into a hugging world. And in the meantime, thank you for all the extremely interesting points you raised, both about where we're heading in America, where the UK is heading, and of course, the nature of green finance. So thank you very much indeed.
A hug.